is September 30th, Friday, September 30th, and this is your daily financial news. Well, good news. It's Friday. It's the end of Q3. We can get the third quarter behind us. We can get excited by what is coming in Q4 and Q1. Again, a lot of you have been talking about getting ready to go shopping, buying assets at distressed or on sale. It's time to do the work. Whether it's stocks, crypto, NFTs, sporting cards, multifamily, houses, doesn't matter. Opportunities will be out there. Opportunity is behind fear. Remember that. I want to do a couple of things because I have forgotten the last couple of days. Let's congratulate Justin and Lacey. Justin and Lacey, you got 2 congratulations. And then finally, Josiah, congratulations for getting your deal done. Your cards will go out in the mail. First and foremost, remember, if you're one of my students, we have a 9 a.m. deep dive tomorrow on probate. I just put the invite in Facebook group this morning, and I sent it on Teachable in the last 5 minutes. If you want to be a part of the deep dive and ask questions of Rylas Dana, our expert, all you have to do is be a part of the group. If you want to know about probate and aren't part of the group, you will see at 9 a.m. on Sunday. We give it all away. I just control who can ask questions. So enjoy that. I look forward to it. So inflation. Inflation is still running hot. We got the Federal Reserve's favorite metric. If you don't remember what that is, it is PCE core. Personal Consumption Expenditures core. Core meaning X food, X energy. And folks, it's not good. I'm sorry, it's just not good. If you were helping for a Fed pivot a la Cathie Wood, this number is not going to help you. Last month, 4.7. This month, expectation, 4.7. Came in at 4.9. Again, this is PCE core. If you add in energy and food, PCE headline came in at 6.2. Expectations were 6. The Federal Reserve can't like these numbers. They will undoubtedly get one more reading before their November 1st raise, which again I think is a lock for 75. It could actually be that dreaded 100 basis points. Again, I think they should have done it last time. We need to get ahead of these things, and inflation is not coming down. In this reading, food up 12% annualized. Energy up 25%. Energy is up 25% even though we are releasing 1 million barrels of oil or gas or whatever the heck it is from the petroleum reserve. This can't be good heading into winter. We are trying to manufacture lower inflation, and that will come back to bite us in the ass when we have to fill it back up, unfortunately. So again, nothing good about inflation. If you want a little solace, if you want to feel a little better, you could be in Europe. Europe reported double-digit inflation. Expectations were for 9.7. It was 9.1 last month. It came in at 10 flat, 10.0. Inflation is a problem. The Fed has to be more aggressive. We're going to get banged with another 75. November 1st is my expectation. Next, we've got Ken McElroy. Ken McElroy is once again talking about a 20 to 30% crash being possible. This time, Ken is talking about multifamily, value-add multifamily. A lot of reports have come out in the last 48 hours about multifamily transactions locking up. They've talked about deal flow stopping. They are starting to talk about short-term debt, variable rate debt, value-add, all of these things. I ask you, where were they 6-9 months ago when I was warning you about these falls? I was warning limited partners that some of you have already lost your money and you don't know. I was warning you, don't get into these syndications with rosy expectations. Crazy rent increases, low cap rates, low interest rates. Now we have syndicators like Ken McElroy saying, guys, a lot of pain is coming. I wish they had warned you earlier, but hey, Ken, nice job. Ken McElroy, stand-up guy, it is probably very hard to kind of point at your peers and say, guys, you are doing some bad deals. You are going to hurt people. Ken McElroy put out a video this morning, or at least I saw it this morning, saying investors are going to go broke. And when you say investors are going to go broke in syndications, it really means your limited partners are going to lose everything. Been warning you about this coming for 6 or 9 months. The debt structure, the crazy, unrealistic assumptions, the 2 or 3 standard deviation moves from average are a problem. They're coming home to roost, unfortunately. Oh my God, oh my God, oh my God. Earnings, bad, all kinds of bad. First, we had Nike. Nike came out and actually beat top line, beat bottom line. Top line means they sold a lot of stuff. Bottom line means they earn money selling a lot of stuff. They talked about China slowdown, 16%. China is in a recession, no question. China could be in a depression given the pullback from consumers. Inventory at Nike up 44%. That is not good. That is not good. While China's sales are down 16%, North America up 13%. So we know that the consumers are still spending in the United States, Canada, Mexico, for example. Then we've got Micron. Micron missed top line, didn't quite sell enough stuff. Beat bottom line, they made a little money. However, there was a huge, massive miss on forward guidance. Forward guidance was expected to be they were going to make 64 cents a share. They reset expectations at 4 cents. That's crazy. 4 cents. That's like a 98% cut to earnings expectations. Rent-A-Center, right, where you go buy your sofas and TVs, kind of like, I don't know, buy now, pay later before a firm. Rent-A-Center cut guidance. Consumers are stretched. They are not buying. And then what I saw this morning, Carnival Cruise Lines. Carnival Cruise Lines came out with a disaster of a quarter. Cruise lines are a luxury. Consumers are pulling back. Horrible bookings, horrible revenue, right? The revenge travel season is kaput. It is done. We have to see Wall Street step up sooner rather than later and cut the S&P 500. We've talked about this dream or fantasy land that they are living in about 7 days ago, I think, where earnings expectations are higher today than they were 9 months ago. Are you freaking kidding me? We are going to have an earnings recession. We've already seen multiples collapse. Now we have to see earnings compression. It's not good. Get your shopping list ready. We're going to get a chance to buy stocks at a discount. Just because I have it here. Las Vegas visitor demand for the month of August is down almost 11% compared to 2019. Again, we were talking about the revenge summer travel. It happened. It is over. It is over. Don't know if you've heard this, but Meta, multifamily again. Here we go. Multifamily. There's an article out about multifamily potentially crashing 20 to 30% as we have forced sales. Folks, I have told you over the last year, my plan is to repeat what I wrote in this book. Buy residential, 1031 into multifamily assets when there is stress in the system. There were people buying apartments at stupid low cap rates with unrealistic assumptions that I know are going to blow up. I want to have my assets ready so I can 1031 into those. Pain is coming. Opportunity is behind pain. I am ready. I hope you are ready. Again, wealth is made when there's blood in the streets. I have said many times, and likely we say many times again, 2023 is going to suck unless you're ready, unless you're doing the work. 2023 could be your best investing year yet if you do the work. And I'm ready. I hope you are ready as well. Meta or Facebook, they have started a restructuring plan. Folks, the best of the best tech companies in the Silicon Valley are fat. There will be layoffs, earnings coming down, advertising coming down. It will hit everyone. There's a lot of fat at some of these technology companies, and the scalpel, maybe machete, is coming out. I was one of these executives 10 or 12 years ago. It is not fun. It is painful. It is horrible. But the machete is coming out, and that is going to not feel good. Next up, the job market. Man, I think there's 4 things that we all need to realize that are going on that we should be watching. First and foremost, there's a report that comes out every Thursday morning that I actually didn't read until this morning. So next week, we'll hopefully talk about it on Thursday. It is the weekly jobless claims. This weekly, 52 times a year, it comes out. This is going to be your and I's first indication that the Fed is winning the battle. It is obvious to everyone that the Fed has to increase unemployment. They don't want to, they have to. And what we got this week from the weekly jobless claims is down. 193,000 folks had to file. Expectations were for 213. Last week was 215. Again, you get a hot job market staying hot with inflation staying hot. What is the Fed to do? They're going to bang us with 75 again. The other things that we need to watch, food. Food was up, I think, 11.2%, highest since 1979 in the CPI. It was up, what was it? I have it right here. Up 12% in the PCE. I think food goes higher in the winter. This is what I was warning about 4 months ago. Then we have to watch rent, owner's equivalent rent. We have talked about all year that rent is a lag. It's coming. It is going to be expensive. Then wages. Again, one of the reasons that I think folks like Kathy Wood is wrong, or at best case, early, she is calling for deflation in stuff, in things. She could be right. No idea. What I'm telling you to look at is just like the 1970s. Rent and wages. Wages are a big part of services. Wages are increasing. We have a dislocation in the job market where the employee has more empower today than they've had since the 1970s. And then finally, energy. For you and me, maybe it's gas. If you're on the East Coast or in the Central where it's cold, maybe it's heating oil. I believe we are about to see some real pain. We artificially, we faked, we manipulated gas prices lower by increasing supply. It was a non-repeatable increase in supply. That increase is about to double the wrong way. What do I mean by that? We release 1 million barrels from our strategic petroleum reserve. We get to winter and we have to refill it. Now we have the government competing with you and I. Energy and gas, I fear, is going up in the winter. Not good. Not good. Lastly, Jason Pritchard. If you guys are not following Jason Pritchard on Instagram, you must. He put out an amazing story yesterday. If you don't know who Jason Pritchard is, he is my Sunday expert. He just released a walkthrough video to show you how good he is and why I call him the best. He did a flip where he bought something basically at the courthouse steps, sprinkled in $60,000 of repairs, and has it sold for roughly $100,000 profit. I don't say that to brag. I just share that with you to show that he is very good. What I want you to realize is rule number 7. Rule number 7 says, audit your personal network. Are they helping or hurting you? Rule number 7 is often ignored, but the most important rule. Why is it ignored? Well, in the good market that we just left, everybody's excited. Everybody's making money. Everybody's doing amazing. Everybody is helping. You get a little whisper of bad news. You get fear coming up. You get projects taking losses or L's. You get all this competition. Suddenly people aren't helping. They're fearful. They're blaming others. They're doing this and that. Jason Pritchard's, I think it's called A Story, yesterday was dead on. Folks, the next 2 years are going to suck. You're going to need to cut people out. If they are watching crash channels or negativity or whatever it is, cut them out. I am not saying ignore the pain. I'm saying recognize and look for opportunity. The only way to win for the next 2 years is this right here. Do the work. Do the work. I know because I've been through it several times that fear is right here, but opportunity is right behind it. I am sharing with you everything I am doing to find and create opportunity. It is hard for everyone, but I know that the deals and the structures that we do the next 2 years will set us up for decades. I'm not saying overbid. I'm not saying rush in and buy. I'm saying do the freaking work. Do the work. So thank you for the super chat. I think it was Kip, if I remember the name wrong, I apologize. But again, yes, go forward. And then finally, Joshua. If you don't know, I am trying to help house hackers, FHA, and veterans in Fresno, California move forward. I am making nothing and have no interest in getting a part of these deals. I'm trying to document their stories so we can inspire others. Joshua is a young man who is looking to do a low down payment house hack. I released the video like 2 days ago. He is not quite sure if he's going to do a fourplex like Dion or Matt, or maybe roommates like Todd Baldwin or Spencer Cornelia. One thing he has to do is he has homework. He needs to go figure out what rental rates might be for roommates. I have never done it. I took some guesses just to keep the conversation going. Joshua has to do that. Matt, the mortgage guy, gave us the self-sustainability test. And we have to understand where we come at in the numbers in Fresno. Watch that video. Again, look at the work Joshua has to do. We will be checking in with Joshua and his agent, Patrick, every so often. But again, folks, it is all about this hat. You need to get the hat, the shirt, whatever it is. Do the work, do the work. I would actually buy that sticker and put it on your computer. This sticker right here is on my computer. Do the work. It is that simple. All right, everybody, take care of yourself. Have an amazing Friday. It is September 30th. We will talk tomorrow. Bye-bye.